The Malaysian government is spending 3.2 billion ringgit in petrol subsidies just to keep our petrol price at 1 ringgit 99 cents per litre. This is up from just 700 million ringgit per month before the war started. And according to them, they can hold this for 2 months at least before they have to review it. And as of the time you guys are watching this video, we're about half a month in. So I'm not going to give you guys a news recap of what's happening out there. I'm sure most of you guys already have at least a basic understanding of what's going on. So I will be sharing how a blocked shipping lane half the world away is going to impact the ordinary Malaysian. It's going to impact our petrol, our groceries, our cooking oil, and even our investments. And I'll be honest, this one for me, it really hits differently just because I am a commodities trader myself. So I do track the prices of palm oil, I do track the prices of crude oil, natural gas, all these things and the headlines every single day. So I know at a lot more detail, I guess, compared to the average person, what's happening in the world right now. Let's get to it. So to give you guys some quick context, it's not some geopolitic lecture or anything like that, but of course the US attacked Iran, Iran retaliated, and now they blocked the Strait of Hormuz. The Strait of Hormuz is probably one of the most important shipping lanes in the world because they transport, anywhere between, I think, 20 million barrels of oil every single day. So when this is blocked, now it's a lot more difficult to get oil around the world, and as of right now, they're even attacking oil fields, so there is an impact there as well. And right now, because it's closed, tanker traffic going through this Strait of Hormuz is basically zero. There are some news saying that some ships are being allowed to go through, but I think the majority of it is not. So if you think about it that way, 20% of the oil and gas being transported around the world every single day is now suddenly stopped. Brent crude, I was tracking this, it was around $60 to $70 per barrel before all of this started. It was really just trading in a range, but after all these things happened, it traded above $100, and just very recently, it went very close to $110 per barrel. So that is the geopolitics, that is what is happening. Now, let's get into how this is gonna impact our wallets. This is where it's going to get real for Malaysians, and the first thing that we will be talking about, of course, is petrol prices. So like I said, our subsidy bill right now is 3.2 billion ringgit a month, up from 700 million ringgit in the past, which means that our subsidies have increased by 4.5 times. That is a lot. 2 billion ringgit of this is for RON95, and then the remaining 1.2 billion ringgit is for diesel. I have to say, we need to be extremely thankful, feeling lucky that the prices of our petrol is still at 1 ringgit and 99 cents for the subsidized RON95 prices, because I would say nearly everywhere else in the world, they're now paying a higher price. If you look at the unsubsidized prices, RON95 is now at 3 ringgit and 27 cents, RON97 is at 4 ringgit and 55 cents, and diesel is at 4 ringgit and 72 cents. If you guys kept track of what prices were back in the day, or like 2 weeks ago, you would know that it was a lot cheaper back then. Recently, I decided to pump petrol, and you guys know that how, even when we use Budi 95, we can still see the price of petrol before subsidies, and I got shocked because a full tank for me is never above 100 ringgit. Nowadays, it's always above 100 ringgit. Our Prime Minister Anwar Ibrahim said a few weeks ago that Malaysia can hold the current prices for about 2 months before they have to review it. And if this war continues, if things stays elevated over the next 1 year, the subsidy bill for Malaysia will be over 24 billion ringgit. And here's the thing that a lot of people don't realize, right? RON97, like I said, is at 4 ringgit and 55 cents right now. When the prices of RON97 goes up, there's a huge gap between that price and the price of subsidized RON95. Right now, that gap is 2 ringgit and 56 cents. The last time the gap was this big was back in 2022, and what happened was the sales of RON97 dropped by 65%. The reason for that? Everyone who used to pump their fancy cars with RON97 decided to switch back to RON95 because that is where the subsidies are. But when this happens, it means that more people are consuming RON95, which means that the government now has a bigger subsidy bill. So what happens after May? It might not be all doom and gloom. According to Hong Leong Investment Bank, based on their research, they think that the government might bring back the price of subsidized fuel to 2 ringgit and 5 cents. Back then, it was 2 ringgit and 5 cents. We reduced it to 1.99. They think that it will just be brought back up. So nothing crazy. That is their expectations at least. Okay, so petrol is the obvious one. I think a lot of people already know this, but the second and third order effects are what a lot of people are missing out right now. So when oil prices go up, the prices of soybean oil goes up as well, because soybean oil is actually used in biofuel in the US. Anyway, not to be too complicating, when soybean oil prices goes up, palm oil prices goes up as well. And as you guys know, Malaysia is a huge exporter of palm oil. Yes, it might be good for our palm oil companies exporting palm oil to the world, but as consumers, it means that we have to pay more for cooking oil right now. I trade a lot of palm oil. That's one of the most primary instruments that I trade right now. And last Monday, the prices of palm oil, aka palm oil in China, it actually hit limit up. It went too high in one day that the exchange decided to stop trading. And even in our local market in Bursa Malaysia derivatives, the prices of palm oil right now is about 4,600 ringgit. Whereas, just a few weeks ago, it was trading around 4,000 ringgit. So yeah, like I said, we are one of the largest palm oil producers in the world, so it is beneficial to an extent, especially to companies directly involved in that line of business. But for us, when it comes to our cooking oil, even if we were to eat outside, the cost of cooking oil will start to go up. And it doesn't end there. When oil prices go up, logistics become more expensive as well, because everything that we eat, everything that we buy has to be transported somehow, right? And usually it's done by trucks that we always see on the highways. So these trucks, most of the times, they use diesel, and like I said, the prices of diesel is now at 4 ringgit and 72 cents per liter. That is a massive increase in price ever since the war started. And when these shipping companies, when they start seeing higher oil prices, what are they going to do? They're going to subsidize it so that Malaysians can keep low prices. Obviously, that's not going to happen. They will then pass these costs on to us Malaysians as well. And then there's something else. Fertilizer prices. This is something that not a lot of people are aware of, but again, because of my trading, I understand what's going to happen. Basically, fertilizer prices are going up like crazy, and I just saw a tweet about how some fertilizer companies in Malaysia, like FGV, have decided to not take any more orders for fertilizer just because the prices have gone up by way too much. And the reason for this is that natural gas prices have gone up a lot as well. And apparently, natural gas is used to make fertilizer. Again, I did not know that any of this happened, but yes, that is the facts. In fact, natural gas can be up to 80% of the cost of fertilizers, and the price of natural gas has gone up by around 60%. In fact, just recently, the largest natural gas plant in the world in Qatar just got attacked, so things are about to get a bit worse. And unfortunately, the reason that I know all of this very well is that I actually had a natural gas position that I've been holding for about 1 month, and I got really screwed over by it because of all of these things. First, it was the coldest winter that we've seen in many, many years. And then when that calmed down, the war happened, so the natural gas prices kept going against me, and I lost quite a bit of money. Tough luck. Anyway, farmers will pay more for fertilizers, so the prices of food will go up. Even if oil prices go down tomorrow, this has already taken place. The effects of this will be felt for the next few months. Okay, so I've talked about all the bad things that can happen to us, and it really could happen, but it's not all doom and gloom because we are Malaysians, and Malaysia is in a very fortunate position where we are actually a net exporter of oil and gas. So yeah, we have to be extremely thankful for that, but it's not as straightforward as just because we're a net exporter, we're going to benefit from this. There are some nuances that you need to understand. Anyway, the headline for this is that in 2025, Malaysia exported 170 billion ringgit worth of oil and gas products, whereas we imported 152 billion ringgit worth. So that means that we are a net exporter of 18 billion ringgit. The thing is, we have to peel back the layers. When we talk about oil and gas, there are basically two things: oil and gas. And when we talk about gas, when we talk about liquefied natural gas, this is where Malaysia is a huge exporter. So natural gas is used for things like heating, electricity generation, and like I was talking about, even fertilizer. Malaysia being the 5th largest exporter of LNG in the world actually helps us a lot, because when all of these things are happening, the prices of natural gas is going up, so Malaysia will earn more money from these exports. The thing is, when we're talking about crude oil, when we're talking about the petrol for our cars, we are actually a net importer, which means we buy more from other countries compared to what we sell. And the thing is, we actually sell a lot of our domestically produced crude oil just because the quality of our crude oil is extremely, extremely high. So we sell this very, very high quality crude oil, and we import the lower quality ones from other countries to put into our petrol stations. And we import a lot of this crude oil from Middle Eastern countries, which means that, yeah, we're kind of in a tricky situation right now. So basically, when we're looking at the entire oil and gas picture, Malaysia is still, I would say, in a very good position compared to many other countries out there, but it's still going to be expensive for us because we still import crude oil and it will still impact our subsidy bill. So Hong Leong Investment Banking, they ran the numbers and they said that for every $10 increase in crude oil prices, Malaysia will have to pay 4.2 billion ringgit extra for fuel subsidies, whereas we will only earn 3 billion ringgit extra in net revenue, which means that on a net basis, when we take our extra costs minus our extra revenue, every $10 increase in crude oil prices has a negative impact of 1.2 billion ringgit. And like I said, crude oil was at $60, now it's at $110. So you guys can go figure out how much this is impacting us as well, even though it's not as much as other countries. The Star also ran a simulation for this. They compared $100 crude oil prices versus $65 crude oil prices, and they found out that our revenue will increase by 10.5 billion ringgit, but our subsidies will increase by 19.8 billion ringgit. So my analogy for this is that imagine you get a raise at your job, you feel happy right now, you have more money, but then your rent prices go up as well. And in fact, your rent prices go up by even more. So net, you're still losing. So what can we expect in terms of our personal finances? Like I said, expect cooking oil prices to go up, petrol subsidies, they might not be able to hold on to these prices forever, depending on how developments go. And food prices, because of fertilizer costs going up, also expect that to go up over the next 3 to 6 months. If you guys have a car where you have to pump RON 97 or even diesel, which is not subsidized in Peninsular Malaysia, then that is extremely unfortunate because now you'll have to pay an extremely high price. I know someone who drives a diesel car and he told me that he's not going to drive that car anymore. He's going to completely switch to a different car that can take RON 95. Honestly, I would recommend cutting down on any, luxurious spending or anything like that, at least until we get a clearer picture of what's going to happen over the next few months. Because, first of all, we already have this AI wave thing where it's replacing a lot of jobs. But now, with all of these things happening, there is a real risk of an economic recession. So, yeah, more opportunities or more reasons for companies to lay off or maybe not give really good increments. Now, moving on to our investments, it's going to be really boring, but the answer, as usual, is just stay calm. Surprisingly, the stock markets actually hasn't reacted that badly. Despite what's going on in the world, it seems like the world's going to end, but stock markets are still, holding up there. I'm quite surprised by this as well. Maybe it will happen if things prolong. Maybe the stock market right now is pricing in a resolution that's quick, but if things go on for long, if crude oil prices stays above $100, then for sure the stock market will react badly. One thing that is surprising a lot of people right now is that the Malaysian ringgit is also really, really strong. So usually in times like this, we would expect the ringgit to weaken a bit just because, we are also impacted by this. But against the US dollar, we're still around the 3.9, 3.95 mark, which is really, really good. And against the Sing dollar, we recently hit a 5-year high, 1 Sing dollar to only 3 ringgit and 6 cents. So yeah, the Malaysian ringgit is actually holding up quite well. And the reason for this is, of course, because like I said, Malaysia is positioned really well in this entire thing. We are a net exporter of oil and gas, whereas other countries like Singapore, Philippines, Thailand, they are all net importers, which means that high oil prices really kills their budget. Anyway, for most of you guys who don't follow markets, for those of you guys who don't follow geopolitics, if you're not interested in any of these things, or even if you do follow it, if you think that you don't know where things are going to go in the future, then I would say just stick to your plans, continue your investments, don't get spooked up. My personal stance on this, what I'm going to do with my investments is that I'm just going to continue my DCA. I'm not going to sell anything, maybe at this point, unless I think that stock markets will drop a lot. But yeah, I'll just continue with my long-term DCA and I won't be panicking. Having said that though, what I want to tell you guys is that don't go all into the stock market just because you think it's cheap. The worst thing that you can do is you use all of your savings, invest it into the stock market, invest it into the crypto, and then the stock markets tank, the economy goes into a recession, you need the cash, and then now you're forced to sell your investments at huge losses. As usual, only invest money that you don't need for the short term. So the question isn't whether higher oil prices will impact Malaysians. It already has, it will, that's for sure. We have to be grateful that Malaysia is still in a strong position, but at the same time, we have to be careful with our spending and we have to react carefully. Let me know in the comments below, have you guys noticed anything increasing in price already, or are things still relatively stable? Of course, other than fuel prices, because that is obviously already up. Anyway, thanks for watching this video to the end, guys. Hope you guys enjoyed it. Hope you guys found it informational. Hit the thumbs up button if you did, and subscribe to my channel if you haven't already. See you guys in the next one. Peace out.